If the worry is that we will do something dumb in issuing the preferred stock, you should worry just as much if we do something dumb in terms of using cash or the common stock. It looks like it's all over now for some time. Self-interest is alive and well in corporate America. It's a close call on that because we would like everybody. The quality of the meeting is enhanced by having a lot of people come. It's terrific for family harmony, knowing the ownership is stable and it will be stable for a very long period of time. None of the people that have started up can offer anywhere near the amount of coverage that Berkshire has. Berkshire is really one of a kind in terms of its capital strength in the business. Our continuing interest will go financially well beyond our debts. Some very smart people working on that. Risk managers and corporations are probably more intelligent about the way they buy their insurance, more sophisticated. They've thought it through better. That's a very good question, and it's the heart of investing or buying businesses, which we regard as the same thing. The authorization is just that it's an authorization. It simply gives the directors of the company the ability to issue preferred shares to do so. The best businesses by definition are going to be businesses that earn very high returns on capital employed over time. The card has a significant franchise, but it does not have the breadth of franchise that it had many years ago. The chances of any acquisition being large enough so that it requires a shareholder vote is probably slim. It isn't because we wouldn't be interested, and if we have one, we'll be coming back to you. The first question is, can I understand it? And unless it's going to be in a business that I think I can understand, there's no sense looking at it. The nature of that business is obviously far more volatile, harder to assess what the average returns might be from a business. The other thing about options is you don't make a decision on them until you have to make a decision. The real key will be how the card does over time. There is a desire to have as long a term and permanent ownership structure as can really be done in terms of planning and the tax laws and so on. There is an ease of entry into the catastrophe business. You'll have a beautiful record for a couple of years. The odds are very good that you will have a beautiful record for a couple of years. There's going to be a certain amount of tension between compensation to the people who work there and compensation to the owners. There's no guarantees. There's no question about Solomon being around. Question is what the average return on capital will be. Even more difficult to predict than we thought. We have a structure that's about as good as you can do. Being able to count on the conditions that prevail at the time of the deal continuing for a long period in the future. We have no feeling that we're getting richer when we issue shares. We will not get more licentious in our behavior simply because we have preferred stock. We have so much net worth that in effect that float is just about as useful to us as equity money, and that means quite useful.